Morning, this is Tom Alexander. It is Sunday, November 27th. It is 10:52 a.m. Eastern Time in beautiful Charleston, South Carolina, and we have the indices fulfilling the positive seasonality, as I put in the written report, which, by the way, if you are not receiving the written report and you want to receive the written report, just send me an email to tom@alexandertrading.com. I'll put you on the list. Also, if you find value in this, it would be very, very helpful if you will like it. Comments are appreciated and will be responded to. And you can subscribe to the channel and you will get notifications when I update, which I will be doing. Okay, so the Dow was up almost 20% from the October lows in the indices, and it is outrunning the other three, but the other three are also up 15, 16% in the same time period. The Dow is actually only 7.5% from a new all-time high. Now, are we going to trade to a new all-time high before the end of the year? I doubt it. Anything can happen. Remember, there's no such thing as overbought or oversold. However, there are divergences among the indices near these highs, with some making new highs, i.e. the Dow, others lagging. There's very disparate activity among the indices, and that always, I say always, I can't recall an instance in any significant high or low forming in the indices when you didn't have the divergences similar to what we see now. Now, that doesn't mean these divergences can't be resolved in a bullish manner, but if they're going to be resolved in a bullish manner, the NDX in particular is going to have one hell of a rally to catch up with the Dow. Now, this can persist and go on, and you can have false moves to the downside, in and out. We shall see. The bottom line here is, and we're going to look at the charts in just a second, the bottom line here is a close below the November 17th low by all four of the primary U.S. trading indices is a sell signal. Something else to be very aware of, U.S. Fed Chairman Powell is speaking on Wednesday. I believe it's Wednesday afternoon. So that no doubt will move the markets. Okay, let's look at some charts here. Okay, on my screen, you can see the S&P, the NDX, the Dow, and the Russell, and the Dow in particular is up almost 20% off the October low. Now, even if we're in a new bull market, this is a rate of change that's unsustainable. And this is auction market analysis. It has nothing to do with macro or guessing. This rate of change is unsustainable to the upside. There's only about 7.5% to a new all-time high, but at a minimum, I would expect sooner rather than later the Dow to become much more two-sided than it has become. Here is that November low in the Dow. If the Dow closes below the November low and all four of the other cash indices close below the respective November low, that's a sell signal against whatever high is put in prior to that. Here are the others. You can see they are in various. The S&P actually traded to a new rally high above the October high, but it's the only one. Both the Russell and the NDX are lagging. Now, it would be short-term potentially bullish if the NDX and the Russell were to catch up and close above their respective November highs. That's the flip side of the coin. But regardless of that, if that occurs and then the indices do close below their November lows, again, with no equivocation, that would be a sell signal. Okay, let's look at, let me go up here and I want to make sure I don't miss anything from the report. So let's take a look. Okay, we'll start with this. We'll look at the profile view. And every week I put this in the report. Now you can see this is what is in market profile parlance would be considered a double distribution. I'm going to go to, I have to unlock this thing because it gets locked up so I can split it out. Okay. So you have a distribution here, you have a distribution here. That's really sort of a factoid. Let's split it out. And the takeaway here, here's the November low. Now I put in the report, there are a couple of paths here. One of the paths is that we continue higher into around near 4,200, or we stop near this level and then maybe we retrace deeply into the Thursday ramp range of conviction. So we shall see. Now, as far as the technical situation is concerned, I'm going to come back to this. I want to start with breadth. Okay, breadth. You have 10-day and the 5-day moving average that are stubbornly maintaining divergences at the new highs. Now, this can change. This is sort of a blunt instrument. The price breadth thing, it cannot be rote traded. So far in this rally, breadth has acted in a bullish manner. We have not had a negative 2,000 breadth reading since October 10th. And we shouldn't have another negative 2,000 breadth reading until this rally is over. Now, to me, a little more binary information is over here in the view of VIX versus the SPX. And VIX has been dropping rather dramatically since the October low. It was up a little bit at the end of last week, but it's still approaching this 20 level. It's not there yet. It would be bullish. It will continue to be bullish if the VIX comes in off this level and begins to drop. If the VIX begins to rise, you want to watch it very carefully because that's typically when price begins to come in. I put this chart in the report. I also put a chart in the report of VIX and the SPX in 2007. And it looks very, very similar to this. We had tops in that bear market every time VIX would drop below 20 within a week or so. And I think that's the case now. If VIX does manage to drop below 20, then you're on alert. So there are a lot of things in here that might have someone concerned at a minimum about the present rate of change to the upside in the stock index futures or the stock indices, futures or cash. Okay, let's take a look at some other stuff here. And here's gold. I'll just pull this chart up. Gold is between levels. You have a buying tail, dramatic buying tail from last Thursday. That would have me leaning to the long side based on what happens in Globex when it opens in a few hours. But in general, you're between critical levels here in gold. And following the report, in the order of the report, take a look at crude. Okay, crude. Crude is once again approaching this critical downside level. I would favor shorts. Friday was a wide range down day. I would favor shorts against Friday's session high. The dollar, I would favor shorts in the dollar against, what was this, last Monday's high? Right around 108. I would favor shorts in the dollar. And then U.S. notes. Now you have to be a little bit careful in notes because we have Powell speaking on Wednesday, and that is likely to cause some rock and roll in the interest rate markets. Okay, guys, have a wonderful week. It should be an interesting week, and I will speak with you again soon.